Good evening, esteemed colleagues. As always, it's Den Strelkov here, along with the Forex Times project. And as always, I invite you to join the community Forex Times. In the very near future, we will introduce an automatic trade copying service about which I will inform you all immediately. Starting next week, I am significantly improving the trading signals and consequently their quantity. Therefore, esteemed colleagues, I invite you to join the community Forex Times. Come, you won't regret it. Now let's take a look at the Euro, Gold, and the S&P 500 index, as well as their potential movements for the upcoming trading week. Let's get started. With the Euro against the US dollar, according to the Commodity Futures Trading Commission data, we see a decrease in buyers by 32% and a decrease in the trading instrument's capitalization by 8% to $2,011 million, 34 million. This tells us that the likely corrective decline of the trading instrument will continue, specifically wave 1, 2, 3, the probable wave. Further, we see a zigzag in corrective wave B and an impulsive movement in probable wave C, but in probable wave 1 of a lower degree. Then 2, 3, 4, 5. Why am I depicting an impulse? For the simple reason that it's likely that wave C will be impulsive because the probable targets are quite far away. Specifically esteemed, the target is at level 1071, and the second target is at level 106.85. Currently, a preliminary diagonal triangle is likely forming in the trading instrument in waves 1, 2, 3, 4 in wave 5. It is likely that we will see the formation of a preliminary diagonal triangle. The exit is corrective. The exit to wave number 2. This is wave number 1, corrective wave number 2. And then we can consider sales. Esteemed colleagues, why do I insist that it's likely we will see corrective wave number 2 in the coming days? For the simple reason that this trading instrument is already in the strongest support range. This is the market maker's options loss level with their premiums. By the way, I publish reports every week on several trading instruments. When these levels are fulfilled and they work very well, I always inform you about it. By the way, right now I see how they worked. Here we have the strongest resistance range. Here is the strongest support range. Here are the professionals with their premiums. Basically, you see how these levels work. Therefore, come to the community Forex Times and you will know these levels for at least 9 trading instruments. And in the coming months, I intend to increase the number of trading instruments from which I will receive data from the Chicago Mercantile Exchange to 12. Then truly, we will see the strongest levels, the strongest support and resistance ranges on which decisions can be made to enter the market. Well, let's return once again to the euro dollar. A corrective rise is expected, followed by further decline. Therefore, esteemed colleagues, you can either decide to enter long within the range of 51.8 on the Fibonacci grid or postpone stop orders above the base of wave C if the correction takes the form of a 3-wave structure ABC, or place a sell stop slightly below the base of wave C or a sell stop slightly below the base of wave A. I've mentioned the target levels. I'll repeat them again. These are 1075 and 106. Gold. Let me remind you first of what we have. We have a probable formation of an ending diagonal triangle. And for the upcoming trading week, according to the Commodity Futures Trading Commission data, we see a decrease in buyers by 2%. The triangle is most likely currently in wave number 3. You might ask, why did you place wave number 3 here and not at this peak? Allow me to explain, esteemed colleagues, but for this, we need to switch to the daily time frame. Here we will see nothing but the triangle, my apologies, the triangle. We know the triangle. This is the penultimate wave. Therefore, if I assumed, and now let's go back, if I assumed that wave number T should be here, then consequently the triangle should have been worked out downwards 1D3, and wave number 1 would form. But unfortunately, and we see on the contrary, an upward wave. Therefore, the triangle worked out upwards like this, separating 3. So we move wave number 3 here, then wave number 4, wave number 5. Therefore, presumably in the next 2-3 months, we will see such a wave structure. What's very interesting in this wave pattern? The fact is that according to the theory of formation of ending diagonal triangles, yes, just like initial diagonal triangles, the hypothetical wave number 3 should always engulf the maximum value of wave number 1. Consequently, I assume that in the next month, we will see a corrective decline to the level of 28 and below, definitely below. Esteemed colleagues, please take a look at what we have on the weekly time frame, a pin bar. Moreover, what's most interesting is one of my favorite pin bar patterns that works with liquidity. Please take a look. The price first rose, then the price falls, and suddenly, what is formed? What does this mean? This means that traders enter to sell and place stop losses slightly above the maximum, and some traders place pending orders below. Consequently, there is huge liquidity for buying here. But when the price starts to approach this liquidity and all buy orders are triggered, theoretically, if there is a huge number of buy orders, this cloud enters. What happens? Buy orders are activated and the price shoots up, right? Correct. But if suddenly the price reverses, what does this mean? This means that someone not only absorbed all this liquidity, that is, sold the same amount of orders as there were for buying to stop it, but also absorbed all the volumes below. That is, they pushed sales much more than there were buys here, and there were huge buys here. The question is, who did this and for what purpose? Probably a very strong player did this with the aim of, again, a corrective decline of this trading instrument. Furthermore, if we switch to the daily time frame, we will see once again a pin bar. Moreover, if we open the MACD oscillator, we will see that the oscillator is falling. The oscillator is falling and we have formed a divergence. Let's take a look at the H4 time frame. Will there be anything there? And yes, of course, esteemed colleagues, I think you can see it. I don't need to tell you anything. You can see the divergence with your own eyes. That is, we have a pin bar on the weekly time frame, a pin bar on the daily time frame, a divergence on the daily time frame, not very pronounced, and a divergence on the H4 time frame, very pronounced. Now let's go down to the H1 time frame and look at the structure. The structure, as it seems to me, resembles an initial diagonal triangle. Yes, esteemed colleagues, very, very much so, namely the first wave, second, third, fourth, fifth. If you don't believe me, we can check it together. I think you know the rule that the fourth wave should be smaller than the fourth wave should be smaller than the second. The first wave should be larger than the third larger than the fifth. We always use Fibonacci extensions to check. The second wave is larger than the fourth. You see that the fourth wave does not reach the 100% extension. Therefore, the second wave, let's also check the third and fifth with you. So here we have the third wave and the fifth. And as you can see, the fifth wave has not reached the 100% Fibonacci extension. Therefore, all the conditions for an initial diagonal are met. Consequently, with you, we have the 1, 2, 3, 4, 5 wave, and then we will see a corrective wave B. And you can enter the market with pending orders for sale, or you can try to apply the Fibonacci grid from the maximum to the minimum and from the Fibonacci level to try to enter the market for sale. This is how I suggest working with gold. But remember, esteemed colleagues, that it is most likely in the fourth wave that we need to go below the level of 2080, below this maximum. And if we look at the monthly option contracts, we see that there are put option contracts for a sum of over $1.5 billion at the level of 2000. A very good level for us. Let's hypothetically see if it's good or not, just to understand. So the level of 2000 is here. Let's plot the level above. Here is 2000 right here. Let's see how it can look. So essentially like this, 1, 2, 3, 4, and esteemed colleagues, I calculated that if wave 2 reaches the level of 2000, it will be larger than wave 4. Therefore, the rule of the terminal diagonal is observed. That's what I wanted to say about gold. And now the Dow Jones Index. Esteemed colleagues, it has probably formed a triangle. And as we know, a triangle is the penultimate wave. Moreover, according to the data from the Commodity Futures Trading Commission, we see an increase in buyers by 39%, so the likely market will continue to grow. The triangle is A, B, C, D, E, and here is wave E. Accordingly, we start with the rise, wave 1, wave 2, wave 3, wave 4. Probably in the final impulse movement, we simply lack the first wave, after which we can consider not corrective, but maybe impulsive movements and a complete change in movement for this trading instrument. Let's look at it from the perspective of divergence. What might await us? Yes, that's correct. Please take a look. Currently, there is no divergence. However, if the fourth wave is slightly prolonged, the MACD oscillator data will go down. Then there will be a sharp impulse to the fifth wave, and the oscillator will show a slight increase. We will probably get a divergence, after which we can work on sales. However, there is always a but. Esteemed colleagues, that in an impulsive movement, wave 4 cannot in any way absorb wave 1's maximum. If our decline continues and wave 1's maximum is absorbed, we have two options. Either it's an impulse after the correction and we can sell, or we will get an extended terminal diagonal triangle. But this is a very rare formation, from the word very, very rare. Therefore, I am not paying attention to it at all for now, and still sticking to the opinion that we will probably see a rise to the fifth wave. However, if we continue the decline and absorb the waves, then I will have a huge question about this wave. So for now, let's stick to the idea of continuing the rise to the fifth wave, and then we will consider sales. Thank you very much, esteemed colleagues. Once again, I invite you to the Community Forex Times. Come and you won't regret it. Have a great evening, everyone, and bye for now.